So we don't need to do introductions because the names will pop up on the screen, and also the guys will put on captions anyway. We're here today to talk about VAT and in particular the impact of Brexit on British industry and how that will affect the relationship with the EU and the rest of the world. Could we just have a very quick sort of overview, the position we're in at the moment and how we've kind of got to that, and a very quick look at the direction of travel that we're in?
Yes, we officially left the EU on the 1st of January this year, 2020, and we've entered a transition period to the end of the year, 31st of December 2021, where in effect nothing changes. We're still bound by all the rules that we were when we were in the EU. The purpose of the transition is to allow the UK government and the EU to negotiate a deal whereby after 1st of January, or from 1st of January 2021 onwards, we will then have a deal which, as a basis for trading in the future. COVID, of course, hasn't helped matters. It's slowed the negotiations down. But irrespective of that, it's fair to say there's a big difference between what the EU wants and what the UK wants. And the EU is saying that they don't think it's possible to have a deal negotiated by the end of the year. The UK government says it should be. The EU has suggested that because of COVID in particular and the delay in the negotiations, that the transition period should be extended past 31st of December. And in the middle of June, the UK government announced that actually on no grounds would that happen. And so it looks like come 1st of January next year, we will be out of the outside of the EU. We may have a deal, and therefore we know what we're trading on against. If we don't have a deal, then we'll revert to what's known as World Trading Organization terms. And so there's plenty of uncertainty at the moment as to what the position will be next year. But come what may, we will be outside of the EU. We will be outside the single market, and businesses that trade either selling to EU customers or buying from EU customers will need to review their position and to take into account the new trading conditions, scenario, picture, whatever it is. Can't think of the word.
The WTO rules is probably a discussion that could probably go on for about 5 months with all the different things that are there. Andy, in terms of what you would kind of expect to see from that, if that happens, what is the sort of the headline assumptions of the WTA rules?
Well, I suppose fundamentally it changes our complete relationship with the EU. So those goods that we're currently bringing in at the moment, tariff and frictionless, effectively, will suddenly potentially become more expensive. So has an impact on businesses and just day-to-day people in the street. Everything that we're potentially buying from the EU has an impact on that. So I suppose the UK government's really keen to get a deal to avoid that being the case. And as Simon said, they're committed to this date. They said there won't be any extensions. Now, whether that is the case, because as we get closer to that date, COVID impacts on the economy, uncertainty on other things, whether they will stick to that remains to be seen. I think the big difference that we have now, as opposed to last year, when there was quite a lot of toing and froing in Parliament and lots of mixed messages, commitments to things that they were then probably backtracked from. Obviously, the makeup of Parliament's a lot different now, so the Conservatives have got more flexibility to probably stick to their intentions around leaving without having to manage that political situation.
Yeah, I think it's the WTO rules is essentially the fallback position. If there aren't any agreements, there's a set of rules which says you will pay X amount of duty and you have to meet certain conditions. The deal with the EU will essentially amend them and should hopefully be more favourable cheaper duty rates and perhaps less onerous conditions to sort of sell into the EU.
Every economy around the world will have different strengths and weaknesses, different areas that they specialise in. Is the United Kingdom uniquely placed to either benefit or not from WTO rules if it came to that? Or are we an economy that wouldn't be in a good position if we had to follow those rules?
Well, I think they're just a worst case scenario. I don't know how WTO rules really sort of apply to supplies of goods. And the UK is mainly a service economy, but it will affect things like import of agricultural products and that sort of thing. It's wide. The sort of Brexit is wider than just tax. Yes, tax, VAT and duty is important, but then you've got for various sectors with sort of agricultural produce, animals, you've got quarantine and standards and whether they're grown with artificial fertilizers and that sort of thing. But equally, in all sectors, financial services aren't affected by World Trade Organization rules, but the ability of the City of London to sell financial services into Europe, will be greatly affected if there isn't a deal.
Just speaking specifically about VAT, your areas of expertise, to the layperson, they hear about VAT a lot, and I think for the most part, most people would think it's just one flat tariff across everything. I don't think that's the case, and there are elements within there. But how complicated could it get when I suppose you'd be having to negotiate different VAT tariffs on, many different things?
It can get very complicated because VAT is a tax on goods and services. So whilst we're in the EU essentially gives us some broad guidelines as to what VAT rates we can apply. Certain goods have to be supplied at a standard rate. That standard rate has to be a minimum of 15%. Some goods can be reduced rates, supplied at a reduced rate. That's got to be a minimum of 5%. But other than that, then the governments in the EU have got the wherewithal to set their own rates. Once we leave the EU, then we can set our own rates, without reference to the EU itself. But when we're selling goods and services into the EU, we might well have to, depending on how we operate, set ourselves up in the EU somewhere, and therefore we have to be aware of what the VAT rates are in France or Germany or wherever it is we happen to set up. So we may well have multiple. We have to be aware of multiple rates of VAT, and also one of the major changes of Brexit, I think it's fair to say, Andy, is that a lot of UK businesses will have to consider setting up in another member state and VAT registering there, because if they don't, they might have to be registered in every member state. So there's some VAT schemes at the moment which we can take advantage of in the EU, which won't apply to us once we leave, unless the deal says they can do.
Yeah, and certainly those businesses with different and more complicated supply chains should certainly be looking at that now. And we're certainly aware of some of our clients that are doing that at the moment, as Simon says, to what's the strength of their supply chain, what's the impact going to be, how does that impact on their commercial contracts and that sort of thing, what other provisions they need to build in, and ultimately what potentially, like Simon says, need to be registered elsewhere in the EU potentially.
So once if you're a British company but gets a registered company in France, would that enable you then to trade as the French company throughout the EU, or would you still be seen as a subsidiary of the British company? and have to register in the other 20, 25, 26 member states as well?
It would depend on how you actually set yourself up. You could be a subsidiary of a UK company. You might be a branch or something like that. But equally, you might be a French company registered in France, which again is a subsidiary of could still be a subsidiary of a UK company. But the issue there is that you need to consider setting up, say, in France. If take an example of you sell over the internet, or you sell through the platforms like Amazon or that sort of thing to private individuals in the EU. If you don't set up in the EU post 1st of January, there's a chance that you may have to VAT register in every member state where you've got a customer. That might be 27 of them. Equally, if you set up in France, then there's a simplification scheme for EU for businesses within the EU, which allows you to have one VAT registration and then account for your sales in all the member states on that one VAT registration. So one VAT return rather than 27 VAT returns potentially.
What's out there at the moment? You do a search on Google at the moment for VAT, EU, and Brexit, and these hundreds of pages pop up. Lots of different advice, lots of different schemes, ranging from your gov.uk sites with explainers on various different ways forward. What's kind of out there? What's the advice that is being given at the moment from government to businesses?
Well, I mean, like you said, there is a lot of information on the usual government websites, but I think probably what our clients say at the moment, it's probably quite complicated, and there's a lot of things that need to be shifted through to work out what's going on. I suppose lots of the advisors have got commentary that's in the marketplace at the moment. But I don't know what you think, Simon. There's probably almost too much information isn't great in some cases. It's being able to cut through and understand what some of the key issues are.
Well, yeah, I think that's true. I mean, because I think the UK government is giving us some broad guidance, because clearly, from their point of view, until we have an agreement, then they can't put anything out that's substantive. And organisations like ourselves are doing, we're going a little bit further, saying, well, look, we're going to be coming out. You need to review consider your position as far as customs duty is concerned, VAT is concerned, your supply chains, looking at your procedures for getting goods through the customs. What we know is that whether there's a deal or no, or whatever type of deal we have from 1st of January, there is going to be customs duty declarations have to be made for shipments to and from the EU, which aren't required now. There's more admin. There's going to be more checks at the points of entry and export and entry and exit from the UK and into the EU. So again, there's going to be delays there, and there's going to be extra costs. There's going to be duty paid potentially where it's not payable now. So whatever the outcome of the deal, businesses dealing with the EU just need to have a look at the systems and see if they need to put anything in place which will mitigate these changes.
There's also lots of grey areas. You talk about things coming in and out of the UK and the EU. Where specifically is the border on the UK now? Because is Northern Ireland going to be a little bit of an outlier on that at all? Is going to be separate rules for stuff coming in through there, and then onto sort of the mainland of Great Britain, or will it be very black and white that you travel into Belfast and it'll still be the same as going in through Dover or Southampton or something, wherever?
Well, if we just leave Northern Ireland aside for the moment, the border is the coastline of the UK. So south coast of England, east coast of England, west coast of England, Scotland, etc. In theory, as far as the island of Ireland is concerned, the border is Northern Ireland and the Republic of Ireland. But as part of the agreement that was made last year, Northern Ireland has an interesting place. It still sits within the single market of the EU, but it also sits within the internal market of Great Britain, and so the border has sort of shifted to somewhere in the Irish Sea. In theory, customs checks should be made on anything transferring from between Northern Ireland and Southern Ireland, and where we are at the moment, those checks will appear to be made when the goods pass from Northern Ireland into the rest of the United Kingdom. How, when, where is open to debate. That's a big area of uncertainty at the moment. But Northern Ireland, I think, Andy, is in an interesting position, and there might be some scope for some planning there for businesses to get the best of both worlds.
Yeah, exactly. And we'd put out an alert on some of the issues with Northern Ireland recently, because obviously the wider political issues with the Good Friday Agreement and how, protecting, making sure that relationship ultimately is protected as well. And I suppose just going back to your point on the sort of the information out there, Simon had seen quite a useful, almost like a questionnaire / survey on I think it was the Sheffield Chamber of Commerce, almost for businesses to complete to identify whether they had any sort of immediate concerns, almost as effectively a Brexit test. So, obviously as a starting point, if you don't import and export into the EU, not a huge amount for you to consider necessarily, but a series of questions to walk through to provide some clarity about where some of the potential issues and considerations might be. So that's maybe something we can have a think about doing as well with our clients going forward.
And when we were chatting earlier on, you mentioned it may not necessarily be that you're an importer or an exporter. It could be that you're just a little bit further down the supply chain, and it still could impact you. So would you advise people to do that kind of thing, even if they think it's got very little relevance to them, immediately?
Yeah, I suppose given the current economic climate, that whole supply chain management's got to be a key consideration anyway, identifying what your cost base is. But you're right, I think there's a potential, even though you're not necessarily impacted directly if you don't import and export, there could be cost implications through your UK-based relationships that are more expensive as a result. So some proactive management around that probably will help.
Yes, I mean, I think even if you don't sort of buy directly from the EU, but you're buying from someone, you're sourcing your products from someone that does, then you need to know that they've got their ducks in a row to ensure that they're bringing in, or well, in particular importing into the UK, in time for you to meet whatever your commitments are.
I think one of the things that people have got in their head about the changing relationship with the EU and the wider world, of course, because we'll be moving out of the trading bloc, which is the EU, and becoming our own nation state to trade with everybody around the world, is how goods will come in and out of the country, and they've had visions of big delays, big traffic jams at ports, etc., etc. Do you think that will be the case, or do you think a lot of the checks and balances and costs will be put on subsequently through clever use of IT, or just having good systems in place and good practices put in place with by using people like yourselves really to make sure that they're well organised?
I think that's right, isn't it? I mean, there's definitely a commitment from the government to use technology where it can do, but I think border delays and increased checks and costs in the short to medium term have the potential to increase pricing until that technology has an efficient solution, because I don't think there is one at the moment in terms of the whole customs checking piece to do that via technology really efficiently.
No, I mean, I think there's a whole raft of measures there which they're going to use to try and mitigate that are as far as trade with the EU is concerned, the major points of entry into the UK are Dover, Channel Tunnel and Felixstowe, I think. And, if you've got vehicles coming through and they all need to be checked to some degree, then there's bound to be delays. But then what HMRC have said is well, in order to allow importers to get used to the new conditions and things like that, they only have to make limited declarations at the point of entry to the UK, and the full declarations can be delayed for up to 6 months. And similarly with any duty that's got to be paid, that won't have to be paid at the point of entry like it should do. It can be delayed for up to 6 months. But after that, then normal rules will apply. But also I think it depends, Andy, and tell me if I'm wrong here, but it will also depend on how goods are brought into the UK. So, if they come in by sort of train and sort of containers, they may well sort of bypass the ports themselves and go to inland clearance depots, who will have which will essentially be the customs point, but inland from the port, but not on the coast, and that in itself, they may well encourage more use of that type of transport to relieve the pressure.
Yeah, definitely. I think that's definitely going to, there's going to be some different options there, certainly, isn't there, in terms of how that's managed.
And there's risks and balances here for the government as well, because they'll need to take into account smuggling. We've still got the issue of drugs and alcohol and cigarettes, which are brought, which are smuggled into the country, as well, of course, as people trafficking. So there has to be, there's got to be some checks at the border.
What are the most common questions that you guys are being asked? Are people engaging with it? Or, I mean, like we just said, that the COVID situations kicked a lot of things into the long grass for a while, but are businesses speaking to you regularly? And is it a standard set of questions that you're getting, or is it all sorts, just literally throwing anything at you from a variety of sectors?
I don't know what you think, Sam. There's probably a mixed bag at the moment. We are getting lots of queries about impact of Brexit and how it's going to impact on different businesses. But I think probably it's right to say that some clients are taking it more proactively than others. COVID and everything else hasn't helped. It's probably pushed it down the agenda a little bit. There's probably a bit of a relaxation when the transitional period came into effect. 12 months in January probably seemed quite a long way away. People sort of kick the can down the road a little bit. But I think it's going to, it's obviously going to come back onto the agenda very quickly. But certainly there needs to be more consideration of what's going on, I think, is probably fair to say.
And you getting any sort of questions that crop up time after time that are clearly an issue for businesses, no matter which industry they work in?
I think that certainly the common question around what's the impact of not having a free trade deal, how does that impact on the cost profile, how's that going to change my interactions with you is quite common, and I'd probably link to that. How will the free trade deal sort of touch everything? And I think, as Simon said earlier, it's difficult to fully comment on everything to do with that, given there is still quite a bit of uncertainty in terms of how that plays out. Yeah,
my experience is that I think some clients are on the are up to speed with this and realise they need to do something. Others, I think, are waiting and seeing. This Brexit has been going on now for what is it? When should we have come out? March last year, was it? And then it was extended, and then it was extended and extended again. And I think people have just been waiting and seeing. And we'll have, I think, a rush of interest in the second half of this year. I think the questions which are bothering a lot of the people who I'm talking to is there any change to evidence of exports, for example. What about the paperwork? What sort of paperwork are we going to need? Are we going to change? Do we need to change our arrangements we have for HMRC for paying the duty that's going to be due and the VAT? Are there any changes there?
I won't ask you the crystal ball question, what you think will happen, but rather what you'd like to happen. So when the trade deal is agreed, are there things in there that realistically you would like to see within there for the future success of firms that you work with?
Personally, I'd like it to be a deal which sort of cuts the duty out of the transaction, so there's no extra cost there. The VAT, yes, there'll be VAT payable, but there is at the moment, so there might be a timing issue there, but I'm hoping effectively that they'll allow the VAT to be paid in the same way it is at the moment via the VAT return, so there's no cash flow impact there. I would hope that the deal is a duty-free deal on both sides, so there's no impact on costs coming into the UK and selling into the EU. And after that, I would hope that, we're not going to get away from the fact that we need customs declarations and paperwork. The process of dealing with that just needs to be made as straightforward and easy to administer as possible.
And I think probably strategically linked to that is, our clients want access to the EU market as easily as possible, and pretty much replicating what they have at the minute. They don't want delays, additional costs added into that process. So that, we want the EU to be a partner, that we still want access and they still want access to us. But there's got to be a little bit of give and take in the negotiations. And I suppose that's probably what worries me a little bit, that there isn't it seems to be a bit too confrontational and cliff edge at the moment, which I don't think is going to help.
The life of the media is often looking at the challenges, the problems, the arguments. Most business people tend to look at things the other way. They look for the opportunities in things. Is this new relationship a great opportunity for business to reshape how they trade with the EU and obviously the rest of the world as well?
Yeah, it only gives the flexibility, doesn't it, to open up trade deals with other countries, which I think was what the government would say. I think the proof's probably in the pudding in terms of how all the Brexit, in terms of some of the promises that were made and how that flows through. But yeah, I think there are opportunities if you go looking for them.
Yeah, I think at the moment, whilst ever we're within the EU, then when we're wanting to trade with the rest of the world, we're tied to whatever deals the EU has agreed, and conditions and licenses and requirements that go with that. And so the benefit of Brexit for us is that we can sort of approach other countries outside the EU and come up with agreements and deals which suit us. The problem is, if they're massively different from what the current agreement with the EU is at the moment, that then will affect our relationship with the EU, because what the EU is very worried about, as I understand it, is that it has an agreement at the moment, say, to trade with the USA. If we go and make a deal to trade with the USA and we relax some of the conditions and requirements of trade and how goods are produced over there.
Yeah, because a big one, like the product standards is a big one into the EU. Yeah.
And then the USA USA company sells a product to someone in the UK, and then we sell and then it gets sold into the EU. The EU is worried that it's a bit of a Trojan horse to get the products into the EU.
Yeah. And how are you guys sort of keeping on top of everything? Because I think from what I've been told, the the specialism that you two both work in is just that. You know, it's quite a difficult aspect. There's lots of complications within it. It must be a very interesting time in your careers to be working through this.
Probably trying to be as proactive as possible, really. But probably, I mean, Simon's a bit older than me, but probably since I've started working in VAT, Simon might have a different view on this, but probably the most issues impacting on VAT, indirect tax, customs duty that there ever has been at one time. And then you throw in COVID and possible economic stimulus that might be coming this week, in terms of, you know, VAT rate cuts and other things. That there is a lot to go at, and there's a lot of consideration. So I suppose from one sense, it's difficult then for us and clients almost to focus on one particular thing. It's almost a package of VAT support that needs to be provided across the board. So I think that's the big challenge for us. Looking at Brexit in isolation isn't the right thing to do, and it's probably difficult given everything else that's going on, if that makes sense.
And I suppose that's how you can join the dots for your clients, having almost like an overview of everything that's kind of going on, and you can advise them far better than them trying to cherry pick different parts of the.
Yeah, and I think it's working with other teams within BHP as well to have a joined up offering, and understanding what we can provide, not just from a VAT and tax perspective, but also a more strategic conversation about, come on guys, what does this really mean for business, and how is it going to be taken forward?
Yes, because what we've got to remember is that if we advise someone to, I don't know, set up a branch or a subsidiary company in France, say, from 1st of January onwards, that will have an impact. Not, whilst that might sort out a VAT and a customs duty problem, it may well create an alternative tax issue. So actually, there may need to be some thought there about, well, what's the best member state to register in? Cite yourself in, and because there's other issues there. Will it sort of give rise to a liability to I don't know, French corporation tax? What about payroll taxes? All that sort of thing.
It's been quite a steep learning curve then.
Yes. And more to learn.
That's right. Yeah, and I think that goes back to as well that future relationship with the EU. How are the EU member states going to react post-transitional period? How easy are they going to make it for us to do business with them? They could be some onerous conditions put on that are outside the sort of VAT and tax space on other regulation and red tape that they seek to introduce to make it difficult for us to compete with their businesses in their territories.
Yeah, and the other thing to recognise as well is there's 27 member states and 27 different customs bodies. They'll all be in different states of readiness. It's not unreasonable to think that the likes of France and Germany and the Netherlands are more prepared for the increase in traffic across the border than, say, Latvia or Lithuania are.
Just through sheer scale.
Yeah.
Yeah. No, exactly.
Yeah. Okay. Is there anything that you both want to kind of get across that we've not touched upon at the moment? I know there's we talked about the schemes at the moment, such as the Moss scheme or the TOMS, or there's the SEVA, or a variety of different things. Is there anything that you want to kind of get into that can be spoke about in the video?
Well, I think the one thing I'd sort of urge our clients to do is just to review their VAT and duty position. At the moment, we'll have some clients who only trade with the EU. So for them, there's a big learning curve. So they need to be aware of what the change is, and if the potential extra costs of duty, how are they going to pay that? Are they going to appoint a freight forwarder to do it on their behalf? Are they going to pay it direct themselves? Are they going to do they need to set up some sort of duty deferment arrangement with HMRC? For those businesses which trade with the rest of the world and the EU, and the changes aren't going to be as great because they're already aware. They're already aware about paying duty and the formal customs documentation and stuff like that. It'll just mean there's more of it. But again, they need to take some steps to ensure that their customs agents are capable of dealing with the extra volume. The agreements they already have with HMRC for paying the VAT and duty, they'll need reviewing. Do the sort of arrangements they have? If you've got arrangements to sort of import, I don't know, goods where you'll pay £20,000 worth of duty, do you need, with the EU coming in and you're going to have to pay more duty, is that going to be more than, is that going to take you over your agreed limits? So you need to look at that and agree about increasing them. I suppose another question, Andy, which strikes me, is what happens if you buy things in from the EU, but you don't know what you're going to do with them? So you don't know whether you're going to sell them on in the UK or whether you're actually going to sell them on to someone outside, the USA. Yeah. And in which case, do you need to be paying duty or thinking about some of the customs duty suspension schemes until you've worked out what you're going to do?
And I think linked to that, for me, probably the key takeaway is having some proactive conversations internally now about what it means, like Simon says, and how do you react and manage that going forward. And we're doing quite a lot of what I was sort of VAT reviews with clients that are not necessarily focused on Brexit specifically, but looking at the overall VAT position of an organisation. And I think that's really important at the moment to understand then what future things such as Brexit, other things that might come out this year from a VAT perspective, how they will impact on organisations. And certainly we'd like to be sort of part of those discussions.
And just going back to those customs duty regimes, which sort of, they might delay the payment of duty or suspend it or what have you. Again, the thing there is there's a number of them around, and they can be onerous to administer. So again, there's a question here of, is it worthwhile entering into them? But until you've had the conversation, well, you don't know whether it is or not.
So would you say your main kind of takeaway from this would be call us, have a chat to us, let's look at your position. Once you've got a good understanding of your entire VAT position, it will help with whatever happens at the end of this year or beyond.
Yeah, definitely. 100% agree with that. Yeah.
Because at the moment, nobody really knows what's happening. So you need to know your own position before you can actually go forward once the new rules are put in place.
Yes, I think so. Until you know your position, you don't really know how Brexit's going to impact on you. You may only need to do cosmetic things, or you might have to do something more major.
Yeah, and it's a hurdle you can't get. You have to get across. There's no way around it. At some point, you've got to consider your position. And
I think this is something that's not just going to impact on finance teams within clients and organisations as well. It's having that knowledge base through the business, particularly procurement. I would say, how does that impact on the conversations they're having about future contracts and also sales contracts as well? Does there need to be some flexibility in those to deal with potential outcomes for Brexit? And the answer is probably yes.
And I suppose if you don't do it, then you might be all right, but equally there might be a nasty surprise at the end of the day.
There's potentially changes within the EU anyway on the VAT side. Can you just explain how that will look in the future as well?
Yeah, the EU has introduced something in the last year, 18 months or so, known as the e-commerce directive, and it affects lots of things, not just VAT. But from 1st of July next year, there's some major changes coming into the EU, which will affect UK businesses that sell into, in particular, EU consumers, private individuals, which will affect how the VAT implications of those sales, irrespective of what the Brexit deal is. And so, you know, our sort of service, our sort of clients who provide, who sell online will need to take that into account, come what may.